So in the last videos, we've looked at the importance of monthly time frame, the importance of 2-week time frame. Now we want to study the weekly time frame and actually understand how to use it effectively to take high probability swing trades, because it's not just looking for AMD on the weekly time frame, it's looking at how the weekly time frame supports higher time frame AMD. So in this case, we have accumulation candle on the 2-week time frame. So if you're just joining, we're looking at 12-hour price action. You can see behind our price action, we have 2-week candle ranges right here. So we've got accumulation candle, 2-week candle stings above, collects the external range liquidity at the high, closes inside of the previous candle range, exposing the low of this 2-week accumulation candle as a higher time frame target. Why does price take this heavy correction before it then dumps to the low? Can it be explained very easily with the weekly time frame? So before we get into that, let's just look at a quick review of why these candles matter. So more trading opportunities. Yes, we can look for that AMD cycle on the weekly time frame. So we can trade accumulation, manipulation, distribution, and you're going to get more opportunities because there are just more candles in context of that monthly time frame. But more importantly, the weekly time frame can confirm or invalidate this higher time frame trades, 2-week trades, monthly trades. We can look at the weekly candle for an extra step of confluence. They also help to refine entry timing, so better entries, better entry triggers. Also, they offer support and resistance zones to understand where price may want to react from. So again, it's adding confluence. We're going to cover that in a lot more detail in series 2. This is a visual. So yes, we can trade accumulation, manipulation, distribution, and we can look for entries on lower time frames, especially if you start going below the 12-hour time frame. But if you want to stick to the 12-hour time frame and lock that in as your execution time frame so that you can just get on with your life, you're going to get less of these. But what you are going to be able to do is use the weekly time frame as confluence for your trading. So what you see here is that we get the last weekly sell to buy. So this becomes a weekly order block. So at first it's a target for price, then it turns into an order block, which means when price is retracing, we can anticipate a next leg higher. So it's giving us additional context or key levels, which is something that we'll speak about later, to target or to understand in advance of taking entries. So what to look for? Firstly, we want to look for weekly phase of price. Less important when looking at the weekly than it is on the 2-weekly and monthly. We still want to understand, is the weekly accumulating? Is it manipulating? Is it distributing? What targets are exposed? Are there weekly targets that we can trade immediately towards? How far away are they? Are they going to actually act as resistance points for us? Alignment. Does the weekly actually support your higher time frame, 2-week and monthly trades? Or is it in conflict? Entry timing. Is there a reason to wait on actually executing your trade? Is the weekly saying something that you're missing on the 2-week? Then again, we'll look at market structure. So to bring this to life, I want to get back to the example we've been covering. So we saw this accumulation, manipulation, close inside of this range, distribute to the high. We also saw accumulation, manipulation, distribute to the low. What you see here is you get very clean structure. You see bearish structure, push into the low, shift, and then push to the high. There's no real breaks in structure. What you see in this example right here is price breaks above the high, closes inside the previous candle range. But before it distributes to the low, it seeks all, or it targets all of the liquidity at this high. So when we're looking at the 2-week candle close, we can mark that. So we mark the 2-week accumulation, manipulation. Now we're looking for distribution. So this candle opens, this 2-week candle opens. So we can just drop down now onto the weekly time frame. And what do we see? We have conflict. So what price is doing on the weekly time frame is we have a bullish accumulation candle Then we have price selling off and stinging below the previous weekly low and shifting structure, closing inside of, well, actually the close is right there, but it closes inside this candle's range. So now we have an exposed weekly high as our target. So at this point, this is our exposed weekly high. We have accumulation, manipulation, and now the weekly is saying distribute to the high. But then if we bring back the 2-week time frame, we can see that isn't what's happening. At this point here, we get a close of a 2-week candle that manipulated its previous candle. So we have time frame conflict. We have conflict between the weekly and 2-weekly candle. So in order to refine our entry, we know we want to distribute to this low. The monthly is saying it, the 2-weekly is saying it. If that isn't clear, check out the 2 previous videos. But in this case, the 2-week is saying we're going to distribute to this low. But the weekly is saying we're not going to distribute to the low, we're going to distribute to this high. So we need to wait. And what ends up happening is we get bullish price action. So we get a bullish order block on the 12-hour. Price expands. But why doesn't it meet its target? Because it then trades into the high of this candle, turning this into an accumulation candle. So when this close happens here, we have alignment. We now have full alignment to distribute to the low because we have an accumulation candle, manipulation candle, and now we have all time frames aligned to distribute to the low. And so you can get an even better entry. As soon as this candle opens, we can either get into lower time frames to look at what's going on, or just take this entire buy to sell candle and just cover the liquidation. We can then take this not to the weekly target, but to the target at the lows down here, and it's at least a 1.86R trade. So you can get in to refined trades by trading the weekly in context of the 2-weekly time frame. So that is the power of, again, time frame alignment. Now, the second thing that I wanted to touch on is what then happens next. Well, you see, this weekly candle is the last sell to buy. So then what happens? We sell to buy. And if you actually study candles in detail like I do, you see that price is retracing. We get this bearish candle, and then we get buys coming through, closing above. So you see this candle here closed above its previous candle. So now we have an additional order block. So this was our original sell, buy, sell, buy. So we now have new support in the market. This entire period, this entire weekly candle offers our weekly demand zone. So now we can just trade from structure. And what do we see? We get price trading down, shifting bullish. I mean, we can talk about entries later, but if you're getting involved, maybe off this order block or somewhere in here, all you need to do is cover the low, and you can just cover continuations there. So you see that the weekly serves multiple purposes. It can stop you getting in too early if you have conflict. It can also offer you support to take trades. That is the power of the weekly time frame. And we're going to show this in even more detail later in future series. I'll have more dedicated videos on this, but that is how to use the weekly time frame in conjunction with the 2-weekly and monthly time frames.